The US banking collapse is expanding even more so now here today as we're seeing the third major bank collapse here this year alone, the largest bank collapse here now and for this year, and the second largest US bank collapse ever. But now it's expanding more. Check this out. First Republic Bank collapse spurs fears for the banking system and the broader economy. Will we see even more massive bank failures, and how deep does this go? So far today, the Dow Jones Stock Index falling over 500 points as banking concerns linger and bank stocks being hit very heavily. Of course, it depends on which bank stock, but the financial industry taking a massive hard hit here. Stocks sink as bank shares plunge, and the Fed meeting underway here for them to decide should we hammer the US economy even more by raising interest rates here yet again today. Well, actually, today and tomorrow here. But yeah, this is unbelievable. Unbelievable. It's just like, yeah, let's just keep raising the interest rates, even though our economy is collapsing in some sectors. Yeah, I know. Meanwhile, US job openings fall to the lowest level since April 2021 because struggling people are taking out more jobs, second jobs, third jobs, and people who even are retired coming out of retirement to get jobs because of how bad inflation is and how much people are struggling. So, yeah, this is just gives you an idea of how rough it is out there. And because all these banks are failing, the FDIC calling for major deposit insurance reforms. And remember that the FDIC insurance has pretty much been that way for decades. They're now saying we may have to make some changes. This is, you can see the symbol here. FDIC insurance deposit since 1933. That's 90 years, right? 90 years. Yeah, even the FDIC is worried. You can see here the FDIC wants to make changes to deposit insurance in the wake of the collapse of now yet another major U.S. bank, First Republic Bank, which was worth over $200 billion. They just proposed three options: raising the limit to a higher number, eliminating the cap entirely, or raising the insurance cap only for banks, business accounts, which are used to pay workers. You can let me know your thoughts on that. The FDIC would need Congress to pass legislation to make any of those changes. They last raised the FDIC cap after the 2008 financial crisis, which we've seen bank failures yet that time. And big banks, small banks, medium banks all failed during the 2008, 2009, and 2010 financial crisis. FDIC Chairman Martin Gruenberg acknowledged Monday that expanding deposit insurance has the potential to, quote, create moral hazard by providing an incentive for banks to take on greater risk. So this is a double-edged sword because banks could go crazy and do the wrong thing here, but said that strong regulation and supervision could alleviate those concerns. I'll talk about that here in a second, but they said that expanded deposit insurance for business account has, quote, the greatest potential to meeting the fundamental objectives of deposit insurance relative to its cost. Business payment accounts pose greater financial stability concerns than other accounts, given that the inability to access these accounts can result in broader economic effects. First Republic on Monday became the second largest U.S. bank ever to collapse. The FDIC seized control of the San Francisco based lender, which had $230 billion in assets last month. This was larger than SVB Bank, Silicon Valley Bank. And this is a concern because, well, if you're the job you work for has money in these banks, well, there's obviously a lot of concerns here, but this is just one example. If your company has millions of dollars in this bank, this is obviously just one example, and they go under, and it's obviously over the FDIC limit, what happens? The entire business could go under, and poof, what do? You lose your job, an entire sector's gone. Yeah, yeah, major problems here, and the government's kind of stepped in and helped out this time, and the last time, and the time before. But the problem is we're starting to see a domino effect over and over and over, and we're seeing this in other countries around the world. Credit Suisse was actually, I think it was over $500 billion. So we're seeing these massive banks start to fail, and it's kind of a domino effect, right? And this is because of interest rates going up. Remember, interest rates are going up all around the world as well. Remember, inflation's all around the world as well. If you've been watching my channel, you know this. It's not just a USA problem. And interest rates are being raised all around the world as well because, again, this is kind of, economics 101. We're not the only country doing this. We're not the only country dealing with high inflation. So it's kind of similar situations. Okay, just like Social Security having a problem with their Social Security trust fund, other countries are dealing with the same issue. Just like France, they're having riots over there right now because they had to raise the retirement age from 62 to 64 over there. And people in the US are like, well, our retirement age is already higher than that. And they may have to raise it again. It's one of the potential solutions. But what's the other alternative? The, the Social Security trust fund fails and or runs out of money. The same thing with France. Same thing with other countries as well. They're all dealing with similar situations. Just like these bank failures are happening across the globe because we're all kind of dealing with similar situations. High inflation, rising interest rates, high gas prices, high food prices. It's pretty much similar in most countries around the world. And it's a tough situation. What do you do? If you don't raise interest rates a little bit, I think they've done it enough. I think they need to stop at this point. I think anything that is interest rate sensitive, it's already enough, right? I don't think they need to keep raising interest rates because, for example, raising the interest rates more is not going to lower the price of eggs. You can't go to your landlord and say, hey, they've raised interest rates. Can you lower rent? Can you lower the electricity bill? Like, it's not going to bring down the cost of anything else that's not interest rate sensitive. We've seen the cost of like homes come down and the cost of things that are interest rate sensitive, but the problem is it's raised the payments because mortgages are more expensive now and car loans are more expensive now. So a lot of people are questioning if it's even working. And trust me, I understand it, right? This is the problem. Yeah. So in theory, what the Fed is going to try to do is raise these interest rates and maybe in a year or two, bring them back down. Especially because now remember, the Fed is a separate entity from the government. Is that the government's paying $1 trillion a year in interest now, and at some point it may be more. I don't know the minute by minute up to date calculations here. But every time they raise interest rates, the government actually ends up paying more in interest, especially when maturities, come up for recalculations here. But the government is going to be paying more and more interest as interest rates go up as well. Now, remember, the Fed is technically separate from the government. It's a slightly separate entity, but kind of goes hand in hand. They're not going to want to keep interest rates high for long. But nonetheless, they're raising them here. We'll see what happens with this next one. Eventually, hopefully, we'll see them pause. Hopefully, right? Fingers crossed. I'll keep you up to date here. We'll see what happens. And then they're going to say, okay, we're pausing. We're seeing some decent data. So we'll hopefully see a pause, and then eventually we'll see, okay, we're going to start cutting them. Hopefully that's not long, right? And then when they start to come down, again, they just start to come down for everybody. Credit card interest rates will come down, mortgage rates will come down, and the government's interest will come down. Okay. Hope now, again, we don't know how long this is going to be. They could keep going up. We'll have to see what happens. But the longer they stay higher, it's bad for everybody. The only people it's not bad for are people with money in the bank. Your savings accounts are higher, CDs are paying higher, money markets are paying higher. Okay, stuff like that are paying higher because if you invest money like that, you're getting higher deposit rates right now. Okay, yeah. So again, they're paying higher interest rates right now because interest is higher. Okay, so keep that in mind. In fact, if you go to like money markets, like Vanguard Money Markets, which is kind of like an online savings account, kind of almost, those are paying over 5% right now, which is a lot. It's a lot. That's as high as they get right now. So keep that in mind. It's very high, very high. And those are basically you can take your money in and out at any given time. It's not a CD. It's money's not locked in. So very high rate there. But the question here is that are we going to see more bank collapses? What's the fear of this? There's billions and billions of dollars that have been withdrawn by American consumers or American, average everyday people because they're worried about this. They're worried about this, and this has caused even more undue stress on the banking system as well. So it's kind of like it runs on the bank, and then it's causing more problems with the bank. And it's like a cycle over and over and over because people don't trust the banking systems. Yeah. So I'll keep you up to date here with everything going on here in our country on a daily basis. If you haven't yet, make sure to subscribe down below. Click the bell icon so you don't miss out on any new videos. And thanks for liking and sharing these videos. Here's some videos you should watch next. Here's big changes coming for millions of people on SNAP, Medicaid, Medicare, and Social Security. And here is a major announcement the Treasury Department just made that is coming here within 30 days. So click on one of those videos next. Thanks for watching, guys, and I'll see you in the next video.